Hey YouTube, wanted to take a minute today to talk about a few things relating to investing and maybe investing in precious metals more specifically, but investing in general. Wanted to talk about a few sensible investment practices because I think we see some people straying away from what we'd consider more sensible investment practices. I think that a lot of people forget the basics. Dollar cost averaging. A lot of people forget about diversification. People aren't taking advantage of their tax advantage accounts. And a lot of these are creating some common pitfalls that are going to come back to hurt people in the long run. So let's talk about those things. Dollar cost averaging. You've probably all heard of that term at some point in your investing career. What it really means is that, hey, we're putting that same amount of money in each month or every 2 weeks, however you're paid, but every pay period, you're putting that same amount of money in to whatever asset class you've decided to be putting it into. Or maybe you're putting a specific amount into each asset class. And what that's going to do is it's going to smooth the ride for you. You're not going to be buying a whole ton when it's high or a lot when it's low. You're not trying to play the market when you dollar cost average. You really are smoothing that ride out. You're buying the same amount when things are up and the same amount when things are low. And that really does help out. It prevents you from making a lot of the most common investment mistakes that we see. We see people buying in at the tail end of bull markets, and we see people selling when investments are in the trough, when really and truly they should be buying or holding on to their assets. So dollar cost averaging and doing the same thing every single pay period, no matter what, will save you a ton of heartache when it comes to investing. And when you look back on your portfolio, if you've been dollar cost averaging over the years, you'll see that it really does give you the best returns. Now, the next most common pitfall that I've kind of seen people fall into is that they don't have the diversification that they need. And I could make a whole separate video on diversification, why it's so important, and all the different things that need to go into a diversification. Because I think that people can get caught up and not have diversification between asset classes. I think that they might not have diversification within asset classes. And what I mean by that is, hey, maybe they are really diversified in stocks, and it's so easy to be diversified in stocks in today's day and age. I mean, heck, you can go out and buy any index fund or even mutual fund, and you're going to get some really good diversification within an asset class, specifically for stocks. But you might not be diversified into other asset classes. And some of those you might want to be thinking about. You might already own a home, or I know that's kind of hard for people at this day and age as interest rates are higher. But maybe you own some real estate. Maybe you do get into the precious metals that you see sitting in front of you, silver, gold, platinum. And maybe you are diversified into a couple things there. And it's okay also to hold some cash in reserve, waiting for opportunities to come out in the future. Not only waiting for opportunities to invest, but also it's there to lighten the load if there's ever any issues that come up in your life. And you'd be amazed at what having a nice cash position set aside can do for your peace of mind. I can't tell you how nice it is to have a good emergency fund set aside to help ease the little tensions in life. You know, maybe it's the car breaking down or the AC going out or whatever it is that happens to come up. Having that cash set aside really, really does make it less stressful for you in the end. So I think that that's something that's commonly forgotten about when it comes to diversification. You know, people think, oh, we're going to invest all this money that we're saving. And I think it's great to be saving a lot of money, but you don't want to lock it up, especially in things that are harder to move, like these precious metals you see in front of you, because you do end up getting, you pay a penalty when you do end up having to sell these precious metals. So I think that you need to not rush into things. And I've talked about this before, but anyone who says you need to rush into it or buy now or you're missing out on things, you probably should run the other direction from that person, because you really aren't going to miss out. You have days, you have weeks, you have months, you have years ahead of you in your investing career, and opportunities are going to come again. Sure, you might miss that once in a lifetime opportunity, but there will be others. There'll be other opportunities that you can take advantage of. So that's what I would say about diversification. Make sure you have different asset classes for different things. And there's different asset classes for different purposes on your investment journey. The third thing I wanted to talk about was tax advantage accounts and utilizing your retirement accounts, specifically your IRAs, your 401ks, or depending on where you work, however they classify it. If it's a nonprofit, I know it's a little bit different, or if it's you work for the county or something like that, it'll be classified something different, but it's still a retirement account and it's still somewhere that you can set money aside. If your employer offers a match, there's no reason you shouldn't be taking advantage of that match. So make sure to take advantage of any match that employers offer. Other than that, set aside as much as you can in those retirement accounts, because that's going to grow either tax-free or it'll be tax advantage at the end, depending on if you pay your taxes now and it's a Roth account, or if it's going to grow tax-free and then you get taxed on it at the end. Regardless, it's going to be a huge, huge savings for you. And those little savings now add up to a whole lot in the future. So, and no, in your tax advantage account, I probably wouldn't recommend that's where you put your precious metals. Probably precious metals would be served for being out of your tax advantage account. You're not going to have as many good options in the tax advantage account. You probably should be going with your stock part of your portfolio within that account. Give that lots and lots of years to iron out the ups and downs of the stock market. So I think that utilizing that tax advantage account is so important and so often forgotten, especially when you talk to, silver bugs or gold bugs or people in the precious metals investing community. And when they do talk about it, I think that they often forget that, hey, there's room for other asset classes other than precious metals in portfolios. And I think that especially for retirement accounts, that's a great place to still have stocks in an investment portfolio. So I think that that's really the main things I wanted to hit on today. So making sure you have that dollar cost averaging, you've got good diversification, and that you're using those tax advantage accounts. With those things in mind, you're going to do great in your investing career.